Welcome to our weekly Forex Forecast. And this is for trading for the week of August 26th to the 30th, 2019. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our Forex Factory calendar here. All right, so this week here, to start the week off, we have G7 meetings. And with these meetings, any comments that come out from different leaders can be very important, especially right now. So last week, we saw that the trade negotiations between US and China, they kind of took a negative turn. So we had heard previously that US and China were going to meet in September, and there were some tariffs from the US that were getting delayed till December. However, China has come back and announced additional tariffs on the US, and then President Trump retaliated, and of course, we got additional comments around additional tariffs on China, as well as President Trump essentially asked countries to start looking for, companies to start looking for alternatives for their products and so forth, and even consider moving the operations back to the US. So those were the developments around US and China trade negotiations, which obviously is not good for the equity markets. So we saw stock markets go down, and we also saw US dollar drop as a result of that. And then another thing that that came out last week, or last part of last week, was also Powell's statement. So Powell actually didn't really do what President Trump wanted, and for that, President Trump has blasted Powell as well. And essentially, what the Fed said that they are going to monitor the situation. There will be additional interest rate cuts, but they haven't really paved a path for when those cuts will come. Many of the market participants were expecting that they would start talking about interest rate cuts in September. Even some of them talking about half a point interest rate cuts. So at this point, nothing's been really been clear about when those interest rates will be coming, but it does seem like the situation is getting worse. So we could have more volatility in the market as a result. So that was from last week. And this week we have the G7 meetings. I'm not really expecting a lot from it. However, anytime we have these meetings, what we have to keep in mind or what we have to keep a lookout for will be the comments that come out of it, because these comments, like I just talked about, can make a big difference in our trading. So keep that in mind. We also have FOMC member Bullard speaking. Bullard has been very dovish. He has been calling for the 0.5 percentage point interest rate cuts. If his speech has more of that, we could see some reaction to that. So keep that in mind. And then we have consumer confidence number here. So even though Powell didn't really pave a clear path for when the interest rates cuts will come, if we see that the numbers that are coming out of the US are dropping, that would make the market expect an interest rate cut. So the market sentiment will turn, and if that happens, we're likely to see the US dollar drop. So anytime we see negative numbers coming up now, they will be more important. So if this is below expectations, we're likely to see US dollar drop on that. And then on Wednesday here, we have crude oil inventories. So this will be very important for Canadian dollar. And we also have the business confidence number here for New Zealand, as well as capital expenditure number from Australia. So we saw, as a result of the escalation in trade tensions, we saw that New Zealand dollar dropped, Australian dollar dropped. So if those escalations continue on, we're likely to see this drop. Plus, if we get negative or below expectation numbers for this, that will add to what's going on, or the negativity with Australian dollar and New Zealand dollar. So one of the reasons the Australian dollar, New Zealand dollar dropped was because with the trade escalations, this is negative for Australia and New Zealand because they are big export partners with China. They export a lot of stuff to China. When US and China are fighting, that is not good for Chinese economy or the US economy, and as a result will have a negative impact on Australia and New Zealand as well. So that's why when we see these escalations, the stock market goes down, we see New Zealand dollar, both of those go down as well at the same time. And then on Thursday, we have preliminary GDP numbers for the quarters for the US. Again, like I said, if the data starts to come out negative, it will have a negative impact on the US dollar. And then we have building approval numbers out of Australia. And then a whole bunch of data here, more on the yellow side. For the major data, we have GDP numbers from Canada. So Bank of Canada still hasn't really announced any kind of interest rate cuts, but if the numbers start to decline, then that's coming as well. And just the expectation of an interest rate cut will have a negative impact on Canadian dollar. So we see the expectation causes the currency to drop. So these numbers are important. For the US, we have personal spending number as well as Chicago PMI and revised consumer sentiment numbers. And to wrap the week off, we have manufacturing PMI numbers from China here. And if these drop, they will have a negative impact on Australian dollar and New Zealand dollar. So this is mostly from our data perspective, but do keep an eye on the trade negotiations and Brexit as well. So another thing that I forgot to mention was in the Brexit, related to the Brexit developments, what we saw was concessions, or at least the talk of concessions from the EU. Merkel basically made a couple of comments saying that they could look at some alternatives, right? So that was positive for British pound. We saw British pound go up as a result of this positive developments. Now, Macron said something else, but what Merkel said, at least at this point, created positive sentiment towards the Brexit, and as a result, pound went up. So China, US-China trade relationship, as well as Brexit will be the two key things to keep in mind as we trade the next week. All right, so let's go on to our charts now. So we'll start off by taking a look at our euro dollar as usual. So with the euro dollar here, initially we did see a drop. So going back to the daily here, so we saw price had dropped previously, then it was hovering in this tight range here for the longest time, couldn't really break the bottom, tried multiple times, and finally we had one push to the downside which failed, and now we have a huge move to the upside here. So this move here has created a positive sentiment here, or positive move for our euro, and this was because of the trade talks falling apart here. So as we can see here, we have a positive or a bullish candle close here. Price hasn't really been able to break below this 1050 number here. So bias here is to the upside. Now, we do have to keep this support resistance in mind coming right from here. See how price had struggled here before it dropped. So we could see some reaction here, but bias is bullish at this point, and I would look for price to go higher. In terms of the pullback, we could get a potential pullback into that level here, 1.1120, let's say, and then looking for a move higher. So bias here for euro dollar is bullish, and this is the type of move I'm looking for. Now, there's support resistance here, so watch out for that, but bias is bullish. looking for it to go higher, and target is 1.1250. And if it goes through that, depending on what kind of market sentiment we have, we could see it go into 1.1320. But for now, this is the larger range it's been trading in for the last several weeks. So I'm just looking for price to go higher towards the top of the range here. So bullish bias for euro dollar. Pound here, this one has been bullish for the last few days here. Price has been going up, like I said, with the Brexit comments that we are hearing. So we have a bullish candle close here. Bias is bullish. Next target will be 1.2400. In terms of a pullback, we could get a pullback into 1.2220 potentially, and then looking for a move higher. Here we are into strong support resistance levels here. So bias for now is bullish for pound dollar. 1.2400 will be the target for this. Aussie dollar here, this one has not done as well. We saw price was trading in a range over here, but then it hasn't quite broken down, but the bias is still to the downside. Price is making lower highs here. So bias is bearish here, looking for price to come back down towards the bottom of this pin here. 0.6680 is the target. So bearish bias for Aussie dollar. New Zealand dollar here, this one hasn't quite done too well. We have seen price drop here. So any type of trade tensions are negative for Australian and New Zealand dollar. And as a result, both of these currencies have dropped, whereas pound and euro have gone up. So with these ones here, bias here is still to the downside. Next target is 0.6320. And then beyond that, we are looking at 0.6250. So bias here is bearish as well for New Zealand dollar. 0.6250 will be the next target here. So looking for price to drop. Now, do keep in mind, we are into support here. So if price doesn't hold below this previous low here, we could see it turn around and go back up, especially with US dollar dropping. But other than that, in itself, bias is to the downside for New Zealand dollar. Dollar CAD here, this one has just traded in a range. This is the daily chart here that we're looking at. We see that price has just been stuck in this range. It's been going back and forth here. So this is what we have on the weekly chart here. Price stuck at the high, couldn't really break the high. So at this point, this one is, I think this one could drop here. So we have a pin bar, and then I would look for price to essentially come back towards 1.3180 towards the bottom of this candle here. It's tested this top of the range 3 times now, so failed. Now looking for it to drop. So bearish bias here, 1.3180 is the target. Euro pound here, this one has been bearish as well. We have seen price drop. Last week, this was bearish as well. So now looking for a further drop here. Now do keep in mind, we are into the support resistance level, but it has this bearishness still in it. So I would look for a further drop here. Pull back potentially into 0.9100. And then we need to see a break here and potentially towards 0.8880. So bias is bearish for euro pound. Euro Swiss franc here, this one has dropped. We haven't seen a break of the bottom yet, because as we can see here, there is a lot of support and resistance, strong support resistance here. Price struggled for a long time before it took off here. So here we are seeing the similar stuff. Bias is bearish though. It's just traded in this previous week's range of last week here. Important thing to keep in mind here would be, can it break the low? If it doesn't break the low, we could see price start to go higher. But for now, bias is bearish. And next target here will be 1.0780. So bearish bias for Euro Swiss franc. But like I said, if it cannot break the support here, price is likely to go higher. Pound Swiss franc here, this one has overall been bullish here. We have seen price go higher, so bias is still bullish here. Next target is 1.2120, and then above that 1.2220. So bullish bias here for our pound Swiss franc. So British pound, like I said, has been bullish with all the positive talks about Brexit. So bullish bias remains for pound here. Dollar Swiss franc, this one on Friday here, we just saw US dollar drop with all the trade tensions. So big drop in US Swiss franc here as well. So bias here is bearish. As a result of that, we have a bearish pin bar here. So looking for price to drop. Now we could get a pullback into 0.9800 like that, and then looking for a further drop. Target is 0.9660. So bearish bias for dollar Swiss franc. Pound yen here. This one has been neutral here last week. We saw that British pound was strong, but then the developments, trade tensions, like I said, actually moved the Japanese yen. So Japanese yen tends to go up, and Swiss franc tends to go up when we have issues, geopolitical problems. And this is why we saw all Swiss franc crosses were dropping and yen crosses were dropping, because both Swiss franc and Japanese yen, they are safe haven currencies and they go up, which means their crosses will tend to drop during uncertain times. So if our uncertainty continues, which it's likely to this week as well, then we are likely to see Japanese yen and Swiss franc crosses drop. So because both of these will go up. So this one here is neutral because both Japanese yen and British pound were strong this week. So we have a neutral candle close with pins on both sides. The way I generally look at neutral candles is that they can break on either side. So we just need to pay attention to overall market conditions, see what's going on. If we see that stock markets are dropping, then we're likely to see the yen crosses drop as well, and including our pound yen. So even though other yen crosses were weaker, pound yen wasn't, but even this one could get pulled down with the rest of the market. So keep that in mind. In that case, we're likely to see a move like that. Now, should US and China decide to talk and they backtrack a bit, then we could see this one go up higher. At this point, though, I'm neutral and I will wait to see in which direction price wants to break and then trade in that direction. So if price goes through the bottom, I'm looking for it to go into the next level at 126.60. But if it breaks through the high, then I'm looking for price to go higher towards 131.60. So neutral bias for pound yen. Euro yen here, like I said, yen was strong. So we have seen this break to the downside on the daily here after staying in the range for the entire week here. We saw it drop. So now our bias here is to the downside. We have another pin bar here. So looking for price to drop further here. Bearish bias for euro yen. And this is kind of what I'm looking for. Looking for price to drop into the next support and resistance level here. Target is 116.20. So euro yen is bearish. Dollar yen here, same thing, a big drop on Friday with the escalation. So we have a bearish candle close. With this one, though, it hasn't quite broken the low yet. So it is making lower highs on the weekly, hasn't quite broken the low. So I would be careful with this one because if it doesn't break the low, it could, again, go back into the range here. It has been trading in the range for the last 3 weeks. So just be mindful of that. But bias is bearish here. Next target is 104.60. And then below that, we are into 103.50. So bearish bias for dollar yen. Aussie yen, this one as well, broke. It was sitting here at the top for the longest time, and now we have seen this drop on Friday. So based on this here, bias is bearish. Again, as we saw on the daily here, this has been trading in a range for the last 3 weeks here because market has been waiting to see what comes out from the talks. And now they have escalated, so this seems like it's breaking down. So bias is bearish here. And next target here, we are into multi-year lows here. We haven't seen these prices since 2008. So just be careful with that one. But bias here is bearish. And next target would be 69.50 and then 68.60. So bearish bias here for our Aussie yen. But like I said, if it doesn't break the low, we just have to be careful because it could turn around and go back into the range. New Zealand yen, this one also broke down. As we can see, price has dropped. All of this essentially towards the later part of the week here. Bias is bearish for this one as well. And in terms of our targets here, we need to zoom out once again. And we are into some levels that we haven't seen again in years here from 2012. So bias is bearish, target is 66. And then below that, we have 65.50. So bearish bias here for New Zealand yen as well. So next target 66.80, then 66 and 65.50. So this is bearish as well. CAD yen, this one has been trading in a range here as well. So all the yen crosses, as we can see, for the last 3 weeks, they've been stuck in this range. And now they are pushing towards the lows here. Again, we have to see a break, otherwise they could turn around. But with the trade tensions, if they continue the way they were last week, the last few days here, we are likely to see yen crosses drop further. With this one, next target would be 78.20. So bearish bias for CAD yen as well. All right, so now let's go on to our commodities here. With the stock markets dropping and yen crosses dropping, another thing we generally tend to see will be our gold and silver going up. So silver here has gone up. This one was also trading in a range. This is the daily chart. So it's been trading in this range for last 3 weeks here. Now it's pushing into the high. So we have a bullish candle close here. So bias is bullish. Next target will be 17.70 here. And then further, we are looking at 18. So bias here is bullish. Again, it's right into the high, hasn't quite broken the high. So just be mindful of that, because if it doesn't break, it's likely to turn around. But this is what I'm looking for. So bias is bullish, 17.70, and then 18 are the next two targets for silver. Gold here, gold is looking bullish here. Big candle close on Friday there. So again, we have a bullish candle close here for the week, which gives us our bullish bias. So price has just been on this bull run here for last several weeks here. So this trend is continuing here. So bias is bullish still, 15.60. Or let's say 15.55 is the first target here. And then we're looking at 1580. So 1555 and then 1580 are the next two targets here for gold. Like I said, it's right into the high. So do need to break the high before we look for that move higher, but bullish bias here, and we're likely to see a move higher. Oil has not done so well. So when we have US-China fighting, oil tends to drop because China is a big consumer of oil. If China's economy is likely to drop, or if the expectations are that the trade negotiations, the way they are going, will have negative impact on China, then, or Chinese economy, we see oil drop, and this is exactly what we've seen here. So bias here is bearish and looking for it to drop further. 51.80 is the next target here, and then below that we're looking towards the bottom of this pin, 50.50. So bearish bias here for oil. And the move I would look for again would be a pullback potentially into 54.80, and then looking for this drop right into the support level at 50.50. So bearish bias here for oil. Copper here is also dropping. Same thing here with the trade issues here. Bias here is bearish. We saw that drop, and now looking for a continuation to the downside. With this one here, in terms of the pullback, we could potentially look for a pullback into 2.50 and then looking for a further drop here. So bearish bias for copper. 2.46 is the first target, 2.40 is the second target here. Bitcoin, I don't actually have a latest chart here, but just to take a look at the weekly here, this is completely neutral here. So bias is neutral. It's still trading sideways, maintaining its upward bias, but please do look at the latest chart. But based on the weekly here, bias is neutral for Bitcoin. S&P 500, this is, we saw price trade in a range, just like yen crosses and Swiss franc crosses. This one as well, price had been trading in a range for the last little bit here. And we were at the top of the range here, but Friday, everything dropped here based on the US and China developments. So now bias is bearish here. We have a nice bearish candle close. So looking for a further drop here. In terms of the pullback, we could potentially get a pullback into 28.70 and then a drop here, but bias is bearish here and looking for it to come back down into 27.70. So bearish bias for S&P 500. NASDAQ, same thing on the daily here. We see price has dropped. It has been trading in a range for the last 3 weeks. And now we saw this big drop on Friday. So looking at our weekly picture here, we do have a bearish candle close. So looking for price to drop further here. Potential pullback into 75.50 and then a drop. So bearish bias here for NASDAQ as well. 7,200 is the target for NASDAQ. Now, again, just like I mentioned with the yen crosses, we do need to see a break of this previous week. It's almost at the lows, but not, it hasn't gone through the lows yet. So we have to make sure that price goes through the low before we target the next one. Otherwise, it could go back into this range here, but bias is bearish for NASDAQ as well. DAX, again, same thing here. We are seeing the price drop, or we saw the price drop, and I'm looking for a further drop. We have a bearish pin bar here, so looking for price to drop. Again, we are right into this support level here. If it doesn't break this bottom, then this one could turn around, because as we can see, it's been stuck in this range. But now this is looking bearish. So next target is 11,250. So bearish bias for DAX as well. FTSE, same thing, big break here on Friday here. So bias is bearish, and target here would be 69.20. So bearish bias for FTSE And Nikkei, of course, we saw this big drop on Friday. So as we can see, the correlations there are in play right now. So we have stock market dropping, which means Swiss franc as well as yen crosses have been dropping, and our gold and silver are going up, and we are seeing oil and copper drop. So these are the various correlations that we tend to see, things that tend to move together. So even though they're not Forex, but the markets do have correlationships that we need to pay attention to. So with this one here, we are still in that range, but bias is bearish. We have a bearish candle close, so looking for it to drop further. And next target is 19,800. So bearish bias here. And this is our next target, 19,800. All right, any questions before we wrap it up here? Okay, no questions. If you would like to get the spreadsheet that comes with this, you can go to tradingwithvenus.com/forecast here, and you can download it from this page. If you have put in it will ask you for your email address and name. If you have done that already previously, you don't need to do that again. I will send it to you in your email. But otherwise, if you haven't registered here and you would like the spreadsheet, basically it has all the targets that we looked at today, gives you the market direction, potential pullback levels, as well as the targets for each pair that we discussed today. If you would like to download that, so tradingwithvenus.com/forecast. So that is it. So that's it. So I will wrap it up here. You guys have a wonderful week here, and I will see you next time. Bye for now.